Welcome to the Market Mystics podcast, where we discuss what's happening in the cryptosphere and trading on earth as it is in heaven. Buckle up and huddle on while we dive in and get weird. Here are your hosts, Joshua and Kim.
Hello, everybody. Welcome to Thursday afternoon.
Hey.
Kim and I both have our glass of wine, and we are ready to discuss crypto with you guys.
It's true. I think first, we kind of need to give a little bit of follow-up from our last episode. We talked about the very significant dip that was going on that happened over the weekend. So at this point, kind of a week ago. And honestly, between Monday and now, so we recorded on the 24th, today's the 27th. Yesterday, maybe the day before, we had this sweet little period where it looked like markets were starting to recover a little bit. And then they dipped right back to where they were.
Yeah.
So
it was pretty much the majority of yesterday through this morning, and then they've kind of turned back down. I would say what's encouraging is, specifically talking about Bitcoin, it's holding that 35,000 kind of level that has been pretty significant resistance, support for it on the way down. And so we'll see what happens if it holds that. The bottom of this particular dip was down 33.5. So we could retest that level again, but yeah, it definitely kind of popped up for a day, was a little bit encouraging, and then not so much.
I know, it was like you kind of start to give that sigh of relief, and then you really have to stop and be like, oh, too soon.
Yes. Right.
Okay, so as we were looking at the charts coming into this episode today, I was also looking at, I'll just be honest, I found a really great page on CoinGecko that I keep referring back to in the past week and a half. It's their global charts with the total market cap page, and it just has a lot of really great information at a glance. So I was looking there today, and I was looking at the top 10 coins in volume for the last 24 hours. And there's something that I found quite interesting about it. And that is that 4 of the 10 in the top 10 coins for volume were stable coins. 3 out of the top 5 were. And I think this is telling as to what kind of activity is happening in the markets with this dip.
Right. Where people are moving to, or, kind of hedging their bets a little bit. One of the things I find really interesting is people aren't necessarily moving money outside of the crypto sphere, outside of that environment, but they are shifting to stable coins,
right?
While the market is a little bit more volatile, or just volatile in a downward direction. So that's really interesting to see that. Yeah, in total market cap, there is some reduction. So some people are pulling out, but a lot of people aren't. They're staying within crypto. They're just moving to a different type of asset.
It's true. So here's the number one, in volume in the last 24 hours was USDT. So Tether. This is the number 3 coin in market cap. But I have to tell you about the volume and how different it is. So the top 3 coins that we all know and love, or we all see sitting at the top of the charts all the time: Bitcoin, Ethereum, USDT. That's currently the top 3 coins in market cap. Okay. But for volume, they're still the top 3, except Tether is in the number 1 spot. So in the last 24 hours, it's been almost $54.5 billion traded for Tether. The next highest is Bitcoin at 22.5 billion. That's less than half of what's been traded in Tether.
Right.
And I think that, just like you were saying, this is real telling about where people are going, and how people are, they're still keeping their money in crypto. They're just moving it to something that's a bit more stable.
Mhm.
So that being said, what's a stable coin?
Yeah, this is a good conversation. I think the easiest way to describe a stable coin is it is a cryptocurrency that is pegged to typically something outside of crypto.
Mhm.
So the most popular, Tether, is pegged to $1.
Right.
So no matter what the outside influences are on crypto or whatever, Tether will always be one. Something else that helps that coin keep its stability is that it is also backed by outside value. So with Tether being pegged to $1, it is also backed by the dollar. So they keep that in reserve to support the valuation of that $1.
Mhm.
And that is important to give you the understanding, but also the comfortability that it will remain at $1.
Mhm.
It's just that's a big, if you're going to put your money in a stable coin, you truly want it to be stable. And we can
Right.
sit here and argue and have argued
We have
about
argued. What is
about
stability?
what is stability. But at the end of the day, especially when you're trading, let's say you're trading out of Bitcoin into Tether, you're probably looking at a shorter term amount or time frame because you want to get back into Bitcoin or another crypto. And so that stability in that 30 to 60 days is probably going to be there for the US dollar.
Hopefully.
Hopefully, yes.
I am of the opinion, and this is where the root of what we don't necessarily agree upon comes from. I'm of the opinion that the dollar is eventually going to tank. It's going to be rendered worthless, I guess, for lack of better terms. And we're going to have something else to base things upon. And what I have seen and what I believe is going to happen is that's going to be Bitcoin. So at some point, if you believe the dollar is stable, then you want a stable coin back to the dollar. But if you believe something else is stable, then you're going to want a stable coin backed or pegged to that. And I
Mhm.
would say this is an important thing to mention with stable coins. There are so many of them that are pegged to the dollar. Like this
Mhm.
is the most common. It's because currently it is the king currency globally. This
Right.
is what all other economies measure value against.
And the top three stable coins are pegged and backed by the dollar.
Yes. But really, in the definition of a stable coin, it is something that offers price stability and is backed by some sort of a reserve asset.
Mhm.
So when we talk about that, we're not talking about like the Federal Reserve, but like they have dollars in reserve backing this. Or it could be they have gold or I
Other
don't know,
precious metals
other
and
precious metals. It could be oil. It could be
Mhm.
based on something else. And honestly, there are also those out there that are pegged against other cryptocurrencies, which I find to be fascinating. And I would love to see more of that happening. And probably I'll wind up looking more into those.
Mhm.
Um, but it's just really, there has to be a reserve there. And that's what it's backed against.
Yeah, my current favorite are the stable coins that are backed by precious metals because I also agree that at some point the dollar is going to devalue. Maybe not as quickly, but will happen. But to some extent, precious metals will always have some value.
I would like to think so too.
Yeah. I mean, I suppose it's always possible. We talk about was it like King Solomon where it talks about gold and silver being so abundant that they used them for drinking glasses and just little things because it was such a common thing. So unless we get back to a world like that, I think gold will always have some value.
I think that's true.
Yeah.
And we've
And
talked about it all depends on where we're putting the value.
right.
However many thousands of years ago it was shells, like
Mhm.
seashells, and then it was precious metals, and then it's been precious metals turned into coins and like government issued coins,
Right.
and then it turned to paper issued currency, and then now it's a lot of digital assets, whether
Mhm.
cryptocurrency or not. You can't really argue that digital currencies aren't a thing, because that is what most of the world runs on.
Right. Yeah. That's definitely true. And I can tell you, so both of us have kind of been researching stable coins for a couple weeks now, hoping to find some really good project that
Mm,
offers some stability so that we can have an asset when markets are going down to run to, but also that isn't connected to things that we want to start to break free from. And so, one of the reasons that we don't operate a whole lot in Tether is because it is pegged and backed by the dollar. And
right.
I'm not necessarily, I don't care too much what it's pegged to. I don't mind having something pegged to one because that is a simple thing to do all your math from.
Right.
To me, what's more important is what is the reserve asset that's backing that. So you do have some that are cash or fiat. You do have some that are precious metals. You also have some that I understand much less that are based on algorithms and futures. And that's sort of more to do with what it's pegged to. But there are people that are getting creative and saying we want to have a reserve asset that is outside of the normal what you would look for.
Right. I think maybe I should not say that. I hope I hope to see more of that happening,
Hmm.
because I also am so into crypto. I'm so I don't know, I'd say enthralled. I'm fascinated by it because it's really thinking outside the box. So for hundreds of years, we've been in this box of centralized currency and kind of money all running through the government and these things. I'm not against the government, but I am for kind of owning your own value.
Hmm.
Maybe I should say that.
I'm a massive supporter of personal freedom and liberty, no matter how it comes.
Yeah. So being able to have something that's thinking outside of those boxes, and even if it's in the within the crypto sphere, thinking about stable coins that are still operating outside that box. And I think the normal term that everyone's going to recognize in this is decentralized,
Hmm.
right? But
Yep.
let's like staying in that vein, staying in that stream and thinking decentralized for this stuff. I think that's where we're going to really start seeing something that's incredible, when there are more stable coins, and I would even say more adoption of those stable coins that aren't backed by the US dollar or the euro or the peso or whatever.
Hmm. Yeah, I agree. And we kind of touched on a little bit of crypto collateralized stable coins.
Mhm.
And one of the things that I find really fascinating about that type of a stable coin is generally, so I think the biggest fear would be, okay, I buy this and it is backed by Bitcoin or Ethereum or whatever.
Mhm.
Well, those things are so volatile. Like we've seen Ethereum has a 24% drop in 7 days. So how do I know that my asset is my stable coin is truly has stability and is actually backed by something? Well, what we're seeing with at least several of the crypto backed stable
Mm.
coins, is they actually have a reserve amount that can be 50% or 100% more than what you put in. So if you put in $1,000 of something and it's backed by Bitcoin, they're going to go buy $2,000 of Bitcoin
To cover that
to cover
volatility.
that volatility. And that's a really important factor and some really good forethought by the people doing these
Mhm.
to say, okay, people are desiring to have some sort of a stable coin not backed by the dollar. What can we do to offer that stability and collateralization and that backing of it there? I think it's an important thing to pay attention to and to see those coming and to kind of put to sort some of what gives crypto legitimacy is when people use it.
Right.
So if you look on the list of possible stable coins, there's like 80 or something like that of stable coins that exist, but a lot of those have very little volume, some of them almost no volume, 73 current crypto stable coins. And so really what you want is something that has legitimacy, because you don't want to put your money in a stable coin and then not be able to get it back out when it's not liquid.
I completely agree. Speaking of liquidity, let's talk a little bit about the pros of stable coins versus the cons of stable coins. Like, what are we looking at for what's good about it and what's going to also make us maybe give pause to it a bit? I think some of the pros is we still get with stable coins instant processing. We get privacy of payments, which is one of the things that is touted across cryptocurrency for a lot of these things. It's volatility free, just like we were talking about. So, because it's backed by something, it's pegged to something else, you're not going to see a big change up and down in its price. A lot of them offer staking. I think to me, this is the biggest pro.
Sure.
So we were looking just specifically at Tether because it is the top traded. It's the number 3 coin. Again, like we mentioned at the beginning of the episode, it had the highest volume in the last 24 hours.
Hmm.
So we're like, let's look into Tether. What is the good thing about getting it, except that you're still kind of in cryptocurrency without having to completely get out? Like if you're in a dip like this when you're wanting to save some of your valuation. But Tether, I mean, this was a quick Google search. We found that Tether easily, you can get up to and even over 100% APY,
Right.
which is huge.
Mm.
My bank account through a normal bank gives me like 0.3%,
Right. Yeah.
which is just
It's pretty pathetic.
It's absurd. It is pathetic. There's
Yeah.
kind of no point in even trying to save money and think that you're earning on it.
Mm-hmm.
But if you look at something that if you can stake it for a year and you get 100% return on it, that is a big deal.
It is a big deal.
However, most of these are not staking for a year.
Right. Yeah. So a lot of what we saw, especially with liquidity and earning high amounts of interest, was sort of providing liquidity. You're loaning your money to the platform so that someone else can make some sort of a trade that they want to, typically a leverage trade. So you're providing the funds for them to be able to leverage their trade. And that can pay extremely well. Some of them I saw were 2 or 3% a day, but they were limited to 7, 14, 21, 28 days. They went in increments of 7. So it's shorter term. So you're kind of in and out and in and out, and you can't just sit it there and forget it. A lot of the ones that were sit it there and just let it earn interest for a year were significantly less, maybe 10% or less, but 10% is still significant. I
Right.
personally have one of the things that I'm a big fan of is crypto debit cards because I think it is a good segue between fiat and crypto and in helping people shift their mindsets and their transactions to crypto. But the one I use is the crypto.com debit card. And one of the things that they offer is they offer APY interest on their stable coins that you put in there. So you have to fund your debit card just like you would your normal bank, but you fund it with a stable coin and they'll pay interest on you holding money in essentially a checking account, which most banks, if they do offer money on a checking account, it is next to nothing. So I know that with crypto.com, if you put like USDC in, you can get up to 8% or somewhere around that 8% mark just for having it there. So not only are you earning a decent return on it, but you also have 24-hour access to that crypto through your debit card. And that is something you're not going to find in traditional banking.
Right. Yeah. I also want to point out earlier, you were talking about in times like this with the market, when you're wanting to change things you want to get out of Bitcoin for now and then put your money into a stable coin until you're ready to put it back in Bitcoin. You made a really great point with this, that even though the staking for the 100% APY or more is only for 7, 14, 21, or 28 days, that may be all that you need it to be to
Right.
then go get back into something else that you're wanting to invest in. So you can, in this time when the market is down, you can still put this into something where it's earning money for you and you're still increasing your assets. Um, and I think that this thing, if we could tie it up and put a bow on it, this is the biggest advantage of these stable coins. You're
Right.
not all stable coins are going to offer this, by the way.
Mhm.
Some do, some don't. I'm not saying go invest in Tether. I'm saying this is the one we looked at, and this is what was out there. What we found is readily available, but there are others that offer other benefits as well. It's just one of those things. Here's a new crypto term. We do this sometimes, right? Do your own research,
Mhm.
right?
I was just thinking.
DYOR. Do it for yourself. Go out there and just do a Google search for stable coins. What are the top ones? Go look at the charts. What's in the top 10? Research them. See
Mhm.
what's backing them. See if it's something you believe in. See what they're offering for any kind of APY. Um, see if there's some other benefits that are connected to it. And then you invest in whatever it is that you think is worth investing in.
Yeah. And not only look at the benefits of them, but consider some of the downsides to stable coins. So, first of all, a lot of them, especially the most popular ones, are backed by fiat. It's still a centralized type of a coin, it's still a centralized backing. And that may be fine for what you want to do. But also, if you want to continue to progress crypto and the way things are moving, you may have to consider that as a downfall and look for coins that have other options than that. That's really up to you of what you personally believe in. Second is liquidity. one of the issues that I see a lot with stable coins is just the ability to move freely in them. So right now, Tether has a lot of liquidity because people are rushing to it to get out of other coins. But what if that changes? What if there's a reversal and all of a sudden, instead of having a 50 million 24-hour volume, it drops down to 100,000 or 200,000? It may be challenging to move your money in and out and around when there isn't that liquidity for it. It's just another important aspect to look at. Honestly, when you're looking at any coin, is what is that coin's liquidity? Can you move freely in and out of that coin? The other aspect of liquidity is we were talking about loaning your money, like loaning your Tether to fund other people's things, which can pay quite high percentage. There is a lot of risk in doing that, because if that person's trade goes to zero and they don't have the money to pay back their liquidity or what they borrowed, you may not get your money back right away, or in some cases at all. So there is some risk in staking versus providing liquidity with inside of a stable coin.
Hmm.
The other issue, which we have touched on a little bit, is the value of whatever is backing the stable coin. And that's an important thing to look at. We've talked about it with fiat or other cryptos or precious metals. It's important to understand what is backing the stable coin that you're looking at, and making your decision from there on, is this a coin that I can really put my trust in to stay stable for the time period that I want it to stay stable?
That's a good point. One other thing that I'd like to mention is, at least in the US, I know regulators are really hammering down on stable coins. I feel like it is kind of just the gateway into them hammering down on the rest of crypto
Yeah,
coins. I think they don't quite have a grasp on them yet. But when something is pegged to or backed by the US dollar, they have a bit more leverage.
true.
But I know, I mean, and it is, let me just not be divisive in this way. It is on both sides of the fence. It is a bipartisan thing that they're wanting to regulate cryptocurrency. So this isn't a political thing. This isn't saying one side is good, one side is bad, because I don't think that. It is saying the government is not for decentralized things. Let's just be
Sure.
honest. They would rather have all of their constituents under their thumb. And one way of doing that is to create laws to control it in one way or another, or
Yeah.
control you using it in one way or another. So that's another con with
That's
the stable coins at this point.
that's a little bit of what you saw with China. So when China banned crypto, more or less what they did was ban Tether, but the only trading pair between Bitcoin was with Tether. And so essentially they banned Bitcoin at the same time because there wasn't a trading pair that was available. And that did have an impact on Tether's volume, Tether's liquidity, the price of Bitcoin, because there wasn't as many people moving in and out of it. But it also pushed people to DeFi, because if there is one thing that people globally will fight for, it is personal freedoms. And at some point, as their personal freedoms become stripped, they are willing to pursue other avenues to stay free. It's been the history of the world, not just in finances, but all over the place. So I think what China did had a direct impact on Bitcoin and stable coins, but it also served to push DeFi coins, um, almost to evolve them faster than maybe they would have evolved otherwise. And I can see that also happening within the US if there starts to become more regulation where normal stable coins or crypto are challenging to get a hold of, people will find other ways to interact. And it pushes the evolution of that sector.
I couldn't agree more. And I think one of the things we've really started seeing, and China is a great example of this, just because they're kind of the first really big crypto investing countries,
Countries.
like people were really into it. There's a lot of mining that was happening there. There was a lot of investing that was happening there, where the government has said, no, we're banning this. But then they come out with the alternative and they have a CBDC, which is a central bank digital currency that is issued by the government there to kind of say, hey, you can't use this stable coin, which is a cryptocurrency, but you can use this coin and we're giving you free access to it, which kind of looks like a cryptocurrency, except again, I mean, it's just in the name. Okay, in my mind, let me just be clear. In my mind, the whole point of cryptocurrency this isn't like a get rich thing. This isn't, it is about investing, but it's really about kind of thinking outside of that box again, right?
Yeah.
This decentralized mindset. And so when your nation says, we're banning all of that, except we're giving you one. Here's a stable coin, but they're backing it exactly the same way they are with other reserve currencies in the country. So I think they're kind of blazing the trail for that, but you can see that happening. They're saying you can't have this, but you can have this.
Right.
And then now we're seeing Russia mumbling. I don't know. There are rumblings. That's what I should say, not mumbling. There are rumblings about Russia possibly banning crypto as well. They said, oh, we're going to do it. No, we're not. We're thinking about it.
I just saw an article today, and granted, this could change tomorrow as well. I saw an article today that said Putin had blocked the legislation for banning crypto and was encouraging miners to come to Russia. So, who knows how long that thought process changes. He could get advice tomorrow that says, nope, we should do it the other way. And it flip-flops. You saw that with China a lot. They banned it, then they sort of didn't ban it, then they banned it, then they sort of didn't ban it. And so I could, Russia may be in that similar thing. I think it's going to take some of these larger, innovative tech countries to say, no, we're not going the central bank currency route. We're going to support DeFi for it to really take off. Because if it doesn't, I think it's still going to get to a DeFi world. It's just going to take a lot longer and be a lot harder and more painful road.
I agree. I think if we see somebody like China, Russia, or the US, I think those are good examples. Adopt this or at least accept it in some way. Like if Putin is saying this, it sounds like they're starting to accept it at least a little bit.
Right.
I think it's going to take one of these really big countries to see it blossom more quickly. When we see the El Salvadors of the world, the rest of the world doesn't look to that and say, oh, look at this innovation. They go, oh, this is a third world country. They don't know what they're doing. This is a joke. It's fleeting. They're just grasping at straws. I've heard it all. Let me also just say that's not my opinion, because I really respect what they're doing there.
Yeah.
With all of this. But I've heard all kinds of skeptics say stuff like this. Well, it's El Salvador. Oh, that's not any trend. There's nothing that can be done about that. They're just off on their own little thing. But when you see some of these bigger world powers who are stepping into it and kind of accepting even a little piece of it, I think that's when we might really see some momentum start globally. Not that it's not this underground thing already. Like there's a grassroots thing happening. People are in it. We've talked about the statistics in the past. People are in it. People are interested. People are mining. People are investing. People are talking about it. There's communities being built around this. It's just a matter of the, what's the word? The wideness, that's not a word, the vastness, like how
Sure.
widely is this going to be accepted and not just have to be whispered about?
Yep. No, I completely agree.
Yeah.
So another thing to keep in mind, everyone listening, all of the thoughts and opinions expressed during this episode are purely those of Kim and I's. They are not financial advice. We are not telling you to do anything. We strongly suggest you do your own research. You proceed in everything in prayer and relationship with the Father, and not take it for our word.
Well said. Completely agree. Thanks for joining. See you next
Thanks,
time.
everyone.
Thank you for listening. Join us every Monday and Thursday as we discuss trading on earth as it is in heaven. If you want to connect further, follow us on social media at market.mystics for Instagram and TikTok, and search for Market Mystics on YouTube and Facebook. If you still need more, follow the link on Facebook to book a coaching appointment. Until next time, see ya.